In this video, I'm going to show you live trading examples and live recordings of the tape going over Bookmap, whether you use Bookmap or you use just a classic level 2 in time and sales with volume. This video is going to be very, very powerful, and I'm going to show you live actual recordings of what I saw on the tape with specific trading setups that I use on a daily basis and actual trades that I have taken. Now, you will see me reference the Discord a lot, and I will say the Discord is available only for Entrepreneurship course members. There will be a link in the description below. And also in the description below, I'm going to link my Instagram at Entrepreneurship. I definitely recommend following me on here. I post daily trading recaps and very good trading tips and tricks that I guarantee you're not going to find anywhere else. The link will be in the description below at Entrepreneurship. You're seriously missing out if you're not following it. But now let's get right into these live examples. The first thing I want to show you all is, pull this up here, the pre-market plan, just to show you the levels so you could understand the context backing the setup. I will pull that up after. So essentially what we were looking for was a break below 3908 on the S&P 500. This was a level from the day prior. This was something that we bounced off of yesterday, and this wasn't necessarily a demand zone. However, it was an area that the market found buyers the day prior. It also was a gap from the weekend. Found buyers at it yesterday, found buyers at it overnight, and what we were watching for was the market to either hold above 3908 to play long or sell off and break 3908 to play short. What happens here on Bookmap is the market comes down. I'm going to pull up the PowerPoint again. Break below 3908. The target was the 3875 demand zone. Pull this up again here. That 3908 support level from yesterday's holding overnight. We're balancing in between and above. It's hard to be bearish above this level for continuation. And if we could successfully break 3908 and the market leading equities continue to sell off, I'll be open to playing puts or playing short. First targeting 3875 demand and then the 3835 demand zone to the downside. So what we're going to see here before I show you Bookmap is we're going to see some large passive buy orders at 3918 and 3908. Now this could be a true buyer in the market loading into a very big large position, long position, or it could be a seller closing out his short position. So what I wanted to see today, pulling up Bookmap here, is what my thought process was as we were coming into this area. We also rejected supply. Was I wanted to see this buyer get filled his large position, whether it be a short closing out his sell order or a new buyer factored into the market. I wanted to see this buyer get filled and the market to go up past this aggressive sell order that we saw earlier in the day at 3926. In fact, in the Discord, I was watching to play the market long off of this level if we could get above 3926. We never did, and this validated that this may have been a short closing his long position, because if it was a true buyer, all of these passive buy orders would have got filled. They got hit by aggressive sellers. The market would have came up because this large buyer would have shown effort to bring the market higher. The market moves based off of effort versus reward. If I'm watching a level, I want to see this level hold and buyers show effort to bringing the market higher. We could have targeted the supply above. In fact, that's exactly what I was watching. Going to a 1-minute chart, this is what it looked like. The market sold off. Basically, this is where the passive buyer was loading into his position or closing out a short. And I wanted to see the market get above this aggressive seller at 3926. We failed to, which made me not play the market long and which validated my point that this may be a seller closing out his short position, which is just going to help fuel the market lower because the market cannot sustain on shorts covering. It could only sustain on new buyers in the market. And how I view new buyers is if demand does form on the way up. So then the market got to 3908, and this was the cleanest setup of today. We get below these passive buyers, and this is something that you want to see if you're scalping on Bookmap or just reading the tape. Here we have our 3908 level. We get below it with aggressive selling prints. Again, red bubbles are aggressive sell orders coming into the market. We hit a very large passive buyer. He gets filled. Then the market comes up. 3908 now is acting as resistance. We get below it, more aggressive sellers coming into the market, come back up, look exactly where we reject, 3908, come back down. Then we see a very weird bracketing order over here. 3908, we're still below it. Then boom, we crack 3900. Aggressive seller comes into the market, and we have a free fall, consolidation, more aggressive prints coming into the market, all the way into our 3875 target, which hit perfectly. So that's an example of showing you the aggressive selling that you want to see if we're breaking below a demand zone or breaking below a key level or something in that nature, indicating that sellers are more aggressive in the market. You add on the context that not only did we reject supply, but we're also not forming new demand and sellers are aggressive, and it gives you a high quality setup and it hit our target at 3875. I wish this was a demand zone because this bounced off of it perfectly, and I wish it just wasn't an area to scale out of a short, cover the shorts. I wish this was an area to get long because we hit it, and then we hit the supply zones 3 different times from this drop. So this is the consolidation area right here. This drop validated a supply zone. We wait for the market to retest, and later in the day we hit the zone and reject. Show you what it looks like on Bookmap over here. All day 3930 acted as resistance, and as we came into the zone, some large buying into it. You had a very passive seller up there basically stopping price from moving higher. Market pulls back from it, and then all afternoon, every time we came back into 3930, we rejected and sold off multiple times from it, and we hit it end of day and closed higher. So that was the setup from today, and I also want to show you a setup. Aggressive selling, hit the market, remove liquidity. Bookmap broke below 3908. This validated confirmation to become a bear and play short. Strong selling until 3875 target hits. Now another way I use Bookmap is to view trapped participants. This is very, very key. I want you all to think a little differently than retail traders. 90% of them fail, so put your mindset and your perspective in not that retail trader mindset and understand the true auction of the market. So how the market works is we move up until the last buyer buys, and the market moves down until the last seller sells. That's how any market works. It's whether you're talking about a car market, real estate, stock market, whatever. The market moves up until the last buyer buys, and the market moves down until the last seller sells. When I see a large buyer trapped at the high, especially at a supply zone, and there's no follow through to the downside or to the upside, it's a very strong sign for a potential short-term reversal. Now, what I mean by this is whatever the market's going to do, whatever it takes to put a large buyer under pressure, force them to close their position, causing more of a sell-off. Large trapped participants recognize this, and they put that participant under pressure. However, if that participant continues to put pressure on the market, then we may see continuation in that direction. What I mean by this is NASDAQ from yesterday. NASDAQ from yesterday, I'm going to actually pull up the NASDAQ chart here. And this is based off of that key supply zone that I mentioned earlier. We hit it 3 different occasions on 3 different days and sold off on it. So obviously an area where sellers are very strong. They're holding the market down. It's tough resistance and extremely strong supply. Then yesterday on Monday, May 23rd, 2022, the market had a strong rally, making higher highs, making higher lows, and we hit that same exact supply zone at 12.045 3/4. Now, what this looks on Bookmap, the example that I showed you earlier, is we're going to see a very large trapped buyer at the highs. When you add on the context of we're at a supply zone, it makes it a higher quality of a setup. If I seen this large buyer at the high randomly and not at a supply zone, yeah, I might have taken the trade, but it just adds more pieces to the puzzle, gives me more confluence, and makes it a higher quality of a setup. So the market came up into the supply zone, a very large passive seller. This is on NASDAQ. And 200 lots is decently heavy size. It's actually very aggressive size on the NASDAQ. Came into the supply zone, hit the high of 12.050. The market moves up until the last buyer buys. We have a very large trap buyer, over 238 lots at the high. And now the market recognizes this. And if we are below this area and the market puts in lower lows, lower highs, and we put this buyer under pressure, the market is going to continue to sell off because it's going to force this guy to close out his position, sell his long position, and that's just going to cause a further sell-off in the market. Same thing for the flip side. If we see this on the demand side and we see a large seller trapped at the lows and we're doing everything to put him underwater and put him under pressure, it's a good sign the market's going to reverse to the upside. However, for the supply side and at the supply zone, we have a large trap buyer. Market does everything we could to put him under pressure, and we got a clean sell-off from this area, about 40 or 50 points from that. The market also puts in a lower high. We stay below this area. Then the market comes back down and dips even further. And this provided a nice high-quality setup on NASDAQ just off of this supply zone. Nice double top going into the end of the day. So this is just using different tools to validate some trades at a supply or demand zone. But ideally, you want to put him underwater because he's going to start sweating. If you're a large buyer and let's just say you're long, right? 200 lots, someone could do the math on NASDAQ. That's a really big pocket. If we're long up here, really, really large size, and the market starts coming down, we're going to start freaking out because our position is underwater. And that's just going to cause a further sell-off, especially when we double top and pull back from it. So trap participants, very, 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 very key. So now I'm going to show you some live videos. These are all trades from the past. Some I've taken, some are just based off of analysis. But I got 6 good setups of live recordings on Bookmap. So putting the pieces together so far. And one thing I do want to mention is support and resistance is different than supply and demand. They are different topics. I have a video of this on my YouTube. People get these confused. Supply and demand is different than support and resistance. So here, this was back in, I want to say, January. The market was downtrending, putting in lower lows, putting in lower highs, and we had the FOMC meeting on a Wednesday, and the market sold off from this FOMC meeting, formed supply at 4,412. So now we got a supply at 4,412, and the next day the market sells off, it formulates demand in this area, and rallies back inside of this supply zone. Now what's key here is not only was it done on higher volume, it was from FOMC, and it was near a high in the market where obviously large participants are active with FOMC from this large drop. I mean, this is a 160 point drop on Wednesday right here. Then the next day we form demand and come into the supply zone and we sell off from it. Now what this looks like is intraday perspective. This is the same supply zone at 4,412. Is we see a nice rally inside of the supply zone, we form a high, we dip down, and then we break the high, which is a failed high a day breakout, and we start moving lower, and then on this move lower, we see a wedge, and we market starts selling off from this. And I said in the pre-market plan, I post pre-market plans in my Discord every single day, and in the pre-market plan from January, I said we had key supply at 4,396 and 4,412. This can very well reject and will be on watch to find selling activity to play puts. So now here's a live recording of what we could see on Bookmap. And what I want to show you all here is as the market comes up into that 4,420 area, we're going to see a very large passive seller get filled. Gets filled some here, then the market comes up. There's some aggressive buy orders that come through inside of supply. At this point, we're breaking above the high a day. So if we have a high a day or a low a day, you want to see increasing volume above that high or increasing volume below that low. Increasing volume on a breakout usually means continuation. And if you see us break a high and there's lack of follow through and lack of volume, it's a good sign that we're going to see a rejection. So as the market came up, broke the high here, what it looks like on the chart is right here, came up, we broke the high, sold off, then we start selling back down. The key point I want to make here is as we break the high, offers step in. So now we have 4,420, we have some trapped buyers at the high, the market sells back down, and as we start moving lower, now this book kind of flips, and there is a seller basically reloading his position from earlier and forming a big area at 4420 that the market's going to have a hard time getting above. Offers step in, and as long as now we recognize this, my job is to find prints intraday that sellers are removing liquidity from the market, stepping into the market aggressively, and then it's safe for me to personally play the market short, play SPY puts, whatever instrument you trade in this case. And as soon as you see aggression here, you could get short. Your stop is above the high at 4420. You're risking about 7 or so points, and I forgot where the nearest demand was. But then we come back into 4420, and look, it acts as resistance. Come back into it, 4420. Another large buyer gets filled, acts as resistance. Aggressive prints coming through. And we're about 20 points off the high here. And then we get a sell-off even further with more aggressive selling prints coming through. So it's just recognizing at supply at this point, some trapped buyers at the high, a very large passive seller showing his intention there, and then aggressive participants coming into the market after that passive seller shows his intention to the downside, and then it's safe to play the market to the short side. Then I didn't get a recording of the wedge break, but we also broke the wedge, and you may have looked to play the market short there as well. Another setup was a demand bounce, and then we retested this level. So essentially what we're going to see here is this is the FOMC drop. This was the next day. We have the FOMC drop, which formed supply to the downside. We have that demand that formed. Here we have that wedge and that failed high at daybreak. Then the following day we sell off into this demand zone pre-market, and then we start moving up. This area right here where my mouse is moving over actually formed new demand from this move up right here. Then the market pulled back, bounced off of this new demand, which is already inside existing demand, and found a bid. Looking at a intraday perspective, I don't really remember, this was back in January, what I saw that really screamed algorithmic. But not always, I said this leads to a reversal. And I was watching for a 4,300 break to scalp into VWAP to play to the upside. And this is what the picture looks like intraday. Market opened up, hit this demand zone, bounced out of it, and actually formed new demand. So looking what it looks like on Bookmap now. Again, everything's going to come together with all these examples, everything that I've been explaining. So the market sells off. We have demand at, I forgot the number exactly. We got demand at 4296. So now we're inside of this demand zone. And what's interesting here is look how the market basically is bracketing inside of this demand zone. So we're in a very tight consolidation range. And I think this is where a large participant basically was leveraging into a large position or trying to get filled. And as long as the market can move back above this 4,300 mark, which was not only the consolidation high, but it also was a whole number with large passive sell orders on the offer. As long as we could get above that, then we could expect a quick move up because we are at this demand zone. So this is what it looks like on the chart right here. Basically consolidation. And then on Bookmap, this is the consolidation that we just saw. Then the market consolidates. I think we break. Okay, then we pull back into 4920 or 4290. More passive buy orders get filled. Aggressive sellers are hitting that order. And we're consolidating in this range for like 15 minutes. Then we break the low and aggressive selling prints come through. Remember what I said earlier. If we're breaking a key level or a low or a high, you want to see follow through in that direction with that participant that broke that area to keep putting pressure on the market. In this case, we got below the low, we broke below it, more selling comes in. And what's interesting here, and really what kind of put the cherry on top of this analysis, was as soon as we broke the low, not a second later, a passive buyer basically was acting like a floor down here as soon as that sell order got filled, which made me think that there was a very large buyer looking to get filled the position. And as long as we could break above that 4,300 mark, I was open to playing longs. We break above it briefly, we pull back. Now, depending on how you trade in your analysis, Even if we pull back into this range, our analysis is still not proven wrong, especially with the buyers basically defending their position. More buy orders get filled, and then watch what happens when we break 4,300 after even more buy orders get filled for about a 30-minute period. Aggressive buyers come in, and we played the market long targeting VWAP, which I think VWAP was 4,314. It was a quick 14-point scalp. We identified very aggressive buy orders coming in above 4,300 with the context that I just mentioned before of a buyer loading into a very large position. And that context, along with those aggressive buyers on the break to the upside, kind of validated the setup. And we got that clean pull rally into 4,312. And I think VWAP was 4,312. Yeah, VWAP was around 4,312. We got even a further rally to 4,340, but you followed your plan and you stuck to your targets. Yeah, we got to even further move up to 4,312. But there's another setup with this. So what I just explained before about that large buyer basically getting into a position, this consolidation area and that aggressive prints above 4,300 basically validated that this was a demand zone to the upside and it was going to form. If the market pulls back, it's safe to say we have new buyers factored into the market around that area, and we want the same buyers to defend this position, not only because we have new buyers factored into the market and new demand, but we also have a bounce out of the old existing demand zone that formed in the pre-market. So then as the market pulls back into this 42.96, this area, this was around 10:30. Look what happens on the tape here. A passive buyer shows up. An aggressive seller hits his passive buy order. We start consolidating more. We pull back into this range, right? 4296 is where this area was, around 10:30, 10:45. Right here. This was 10:30, 10:45 when we pulled back into this range, and watch the aggressive participants come into the market. Watch this move. See how we start having aggressive buyers come into the market? With the previous context and the current tape, I'm okay with taking the market long, stop below that area where that buyer found value before, and you could get a quick 40 points scalp to the upside. I'll take that all day long if I'm risking, 8 points or 10 points in this case. Okay, here's another setup. This was also an interesting one. So this was back in January as well. And what we were watching for was a sell-off into this demand zone. Actually, no, this is the exact setup that I was just explaining before, just on a smaller time frame. So here's that consolidation area. This is off of a 1-minute chart. This is where the new demand formed. This is the rally that we took out of 4,300 earlier, right where my cursor's at, scalping into VWAP for a quick scalp. Eventually, the market pulled back down, and this consolidation area from earlier, where we saw that strange buying activity, was defended, and we retested this buyer. He proved to be strong, and this is where we saw those aggressive prints coming into the market. We broke above that wedge. We had some nice volume coming into the market, and we could spot this all aggressive orders right here. See those aggressive, very large green bubbles? That's supporting our thesis to the upside. And in the Discord, I say a possible trade scenario I'm watching for is the area to hold on a pullback, 42.99 to low a day. If this does not hold, I'm not interested in longs, as the market will either balance or sell off. We pulled back into this 42.99, and we found a nice rally out of that area. Okay, this was another setup, and this was a very, very interesting one because this was extremely large size. So let's see what we got here. So we had a very large trader basically defending his position. The S&P hit this demand zone, bounced out of it, and it looks very similar to the setup I just explained earlier, where we pulled back and we retested this area and found a bid off of it. However, on Bookmap, and again, you could use other volume profile tools or other order flow tools. You don't have to use Bookmap. We could see on the volume profile here a 3,600 lot seller or buyer, at 45.35. And what's interesting here is that's a very large discrepancy because what hit the bid at that price was only 660, and then a tick below that was only 1500. So this is a little bit of a discrepancy. And how I basically read the tape or even Bookmap is I just look for things that are unusual or weird or out of the ordinary. And I see how I can relate that to my analysis, put myself in the perspective of whatever participant that person is, whether they're a buyer or a seller, and I figure out how I could trade on the same side as them or where they're going to be in the most pain. Because those two pieces of information right there, where they're going to be in the most pain or where they're going to be the most rewarded, gives me a really serious edge in itself. So in this example, we had a very large buyer at some point earlier in the day at 45.35. This also aligns with a demand zone which started at 45.38. So at 45.35, we have a very large buyer. And what's extremely interesting here is I want you to keep a note on the size. So right now it's 3,600 lots. What we're going to see here is as the market pulls back down into this 45.35, there isn't any passive buyer shown on the heat map here or the level 2, basically providing the liquidity to hold the market above 45.35. So watch what happens here. We pull back into 45.35, and there's going to be some aggressive sellers hitting the market, yet there isn't a passive buyer basically there to support the market at 45.35. And we come into this level multiple times. Here's a second time. He's at 3,700 lots. We defend it, and I think we pull back in it one more time. Yep. We pull back into 45.35 one more time. There isn't a passive buyer here, yet the market could not get below 45.35. So I don't know if it's this buyer doing whatever he wants to do to defend that position or if it's somebody else, but we really could not break below 45.35. And if I'm recognizing this intraday and I'm seeing this weird discrepancy of look at this price action. I mean, just we're hanging out here at 45.35 and we're not selling off after such aggressive prints. And every time we hit it, we try to move up. So when I see that, I recognize that. And with the context that we are at demand, this gives me a solid setup to potentially play the market long if we start seeing aggressive buy prints to the upside for more risk, but a better probability of it working out. Or I could even get long with this guy, basically trade with him, but that's a little bit of a lower probability, but the risk will be extremely tight because we're getting in, 5 or 6 points lower. Then we see the prints start coming through. We pull back down. And look what happens. Pull right back down into 45.35-ish, 45.36. Again, he's doing whatever he could to defend that position. Then aggressive buy prints come through. And the market has a clean rally as soon as we spot these buy prints. I'll let this play out so you can see them form in real time. Here's 45.35. Here's that large buyer. And here we got large prints coming through. It validated that trade off of demand. And it gave us a nice setup to play the market to the long side. And then we hit a high at 45.56. We pulled back. And look what happens. He defended his position on that pullback. The market came back up solely off of a large buyer defending his position, 3,800 lots. Someone could do the math on that. And at the same point, to give it more confirmation of exactly what I said earlier, Tesla, a major market leading equity, and NASDAQ also bounced off demand with it. Tesla hit the demand zone, strong buying volume, caught a bid off this demand zone. Whether you trade Tesla itself, go for it. But if you're trading a market leading equity or a market leading indice, ES, NQ, if we see this type of action on Tesla, and this day Apple did the same thing, Microsoft did the same thing, and it gave added confirmation to take this market long. So we got 3 pieces of information here. We're bouncing off demand. We got a large buyer defending his position. We got a large buyer in the market, and we have other market leading equities bouncing off demand as well. Gives us a nice trade. Now, this was a losing trade. I remember taking this setup, and in my opinion, was a really bad setup. Yet, I let my emotions get involved, and I took a trade that I should not have taken, reviewing the chart after the fact. But everything looks good in hindsight. And in my opinion, I think this was an emotional decision and I should not have taken this trade. But essentially what we're going to have here is the market dips into this demand zone and we rally out of it. And we come into supply at 4055. Now, what's important here, and my mistake, is I take the market long inside of supply. I should have never done it. I don't know what I was thinking here. But what we're going to see here is on Bookmap, we're going to see a very large seller at 40.50. And as you can see, as the market's coming up to 40.50, we basically have a ledge right here, right? A lower volume above it, higher volume below it. There's 4,700 lots getting absorbed on the offer, which means there's 4,700 lots so far today at 40.50, which is not bringing the market higher. So what that tells me is there must be a seller passively selling to all those aggressive buyers over 4,700 lots at that level. So what I was watching here for, and my mistake was, I was looking to play the market long if we could get above 40.50. Now the mistake here was I did not recognize we were at this supply zone. I got no business taking the market long at supply. However, I expected us to keep bouncing or keep rallying off of this supply zone and invalidating it because we did bounce off of demand pre-market. However, watch what happens when we break above 40.50 right inside of supply. Watch what happens here. So not only did 40.50 act as resistance, the offer stepped back in after a large position got filled. The market moved back lower. Aggressive prints came through. I want you to see what happens at 40.50. Now we got 40.50. Now we got 5,300 lots at that price. Now we got 5,700 lots. Now we got 6,000. And look what happens. An offer reloads here. Now, two ways you could look at this. You could look at it as, hey, let's play the market short. We're at supply. We're putting in a lower high at supply. We obviously have a true seller in the market. And if we do break the high, give it a little wiggle room to break, attract a bunch of longs, and then dump the market because we are at supply. Remember what I told you guys earlier. Think differently than retail. If we are at supply, think of ways to play the market short instead of playing long if sellers are present. If buyers are present, it might be a different story and you might want to avoid the short and focus on longs. However, my stupidity is I was looking to take the market long above this supply zone or above this 4050 seller to put him underwater, and I didn't give it enough wiggle room. At this point, we got 6,700 lots at the offer. It just keeps getting absorbed. We're failing to break above it. This is a red flag if you're a buyer. And like I said, if we break above it, give it wiggle room, let it attract longs. Longs buying inside of supply is a recipe for a reversal. The market needs our liquidity. If 90% of retail traders lose, 90% of retail traders are giving their liquidity to big money who is basically on the other side of their trade doing the opposite so they could use our money to get a gain, fill their position, and gain liquidity in the market. So then the market broke above 4050. I took the market long right here. Right as we hit the supply zone at 4055. Never got above 6 to 8 points, which basically shows acceptance of that level. A seller basically got filled. An offer stepped into the market, and this was a major fake out to the upside. The offer, when we got back below 4050, got back in and showed more intention over there at 4050. Then the market dipped and I stopped out of this position. I should have waited and I should have not thought like a retail trader, although I have taken setups like that which have worked out before, but it was a perfect supply rejection. And how I view this is a bunch of retail longs got long above supply, inside of supply, and after a large seller got filled the long position, then we pulled back into this demand zone and we actually found a bid off of this level. And then here's actually a picture of that seller. 7,500 lots, aggressively bought above 40.50, broke above it. I like to give my trades about 6 to 8 points of wiggle room to basically show acceptance of that level. And then if it brings continuation, 4 points is a test, 6 points is a acceptance, and then 8 points is continuation. In this case, we broke above 4 points. This level got tested, and I really should have been looking for ways to get short instead of long, but I reviewed it, and now I know and I'm prepared for a future trade at some point in the future. Okay, here's your setup. I don't have a recording for it. However, this was in the Discord. This was an intraday commentary. This is basically where I update my thought process throughout the day. We're watching a bounce out of this demand zone, but instead of getting long, this was at the same point that that example I just showed you earlier with the absorption at 40.50. Came to the demand zone, and we were watching a break above 3990 and 4,000, and it should bring us for a move into 40.13 and then a move into 40.30. I took the first setup was a losing trade, right? A lot of people after a losing trade put their head down. They freak out. I'm red on the day. I don't want to lose any more money. I'm not mentally prepared. If I'm down 500, I don't want to lose 1,000 if I take another wrong setup, right? Sometimes the best setups happen after you stop out. So if you stop out of his position, don't put your head down. Look at ways to focus on another opportunity, because there's always going to be opportunities in the market. A lot of people take a loss, they get frustrated, they shut their screens down, and 5 minutes later they miss out on a crazy setup that they could have made back their loss and then put more money in their pocket. This is a perfect example. I took a losing trade. Instead of walking away, shutting my computer down, I focused on another opportunity, and we took the market long above 4,000 into 40.13. I don't have a live recording of this, but look what happened at 3,990 and 4,000. Look at the aggressive buying coming into the market. Brought us a move into 4,013, and later in the day it brought us into 40.30, which was our target. But this is the type of buying you want to see if you are playing a breakout or if you're trading on the same side as buyers. This is the exact type of action that you want to see. Now, here we have a lower high at supply and a break of 4,000. This is another nice setup. I got one more after this. So here we have a lower high at supply. Lower highs basically just show that buyers failed to provide more fuel to the fire to bring us past the previous high. When we see it at supply, it's a very bearish sign. But instead of getting the market short at supply, remember what I said earlier. Sometimes I don't take trades at supply. Sometimes I just use it as context. And in this example, we hit supply. I did not get short at supply. And then the market started moving down to broke below support at 4,000. And we saw aggressive prints to the downside below 4,000. I want to show you what this looks like right here. So we hit, I don't think I have the supply rejection, but I do have the 4,000 break. So again, we have a lower high at supply. If we fail to hold and VWAP and break below 4,000, I may look to play short. There's not much stopping us from selling off into 3,985. So a lower high was put in. We were watching for a break below 4,000 if we can confirm it by the tape, targeting 3,985. Watch what happens as the market breaks 4,000. We have a large passive buyer there. If we are trading this, we got aggressive prints coming in before the break, and then we got more aggressive prints as we break through this level. Consolidation, and this was just a clean, fast sell-off below 4,000 for a 15-point scalp into 3,985 target. Bids stepped in, as you can see down here. Here's the aggressive break below 4,000. Large red bubbles coming in. We hit our 3,985 target, and you move on from the setup. That's all you got to do. You come up with a plan. You sell your position if your target hits or your stop loss triggers. Anything else is noise. You have to follow a plan, create a plan, and stick to that plan. And then this example, this is the last one. I made a video on this on my YouTube a while back, but basically very strange action here on the lows of the S&P 500. What was interesting here, and again, this is what I mean about looking at the tape to spot different things that might be out of the ordinary or a little weird. And in this case, at every $1 or 1 point increment, there was a sell or a buy order passively for, I think it was like 150 or 200 lots at every $1 increment for 10 points. So right there, that was a little too clean, a little too smooth. and something you don't see very often at exact increments for the same size. So then the market started selling off, and these buyers got filled. Or this large one order, we could call it, got filled. I'm sure it was one participant. And remember that first example I mentioned earlier about, this could be a short closing out of a position, or this could be a buyer looking to get long something. The move after the action will explain what it is, because this buyer or this seller is going to do whatever to influence the market. So in this case, this large passive buyer, I don't care if it's a short, I don't care if it's an actual buyer, gets filled his position. Also had a very weird bracket order. And this order gets filled. Now, there's two ways we could play this. Let's see if I have a good example of this. The first way is recognize this and speculate that new demand is going to form. The example I told you earlier is moves to the upside cannot sustain if there's not new buying in the market. So when I see this and I see aggressive prints come to the upside and I see aggressive buyers step into the market, I personally view it as new buyers in the market as long as this area could hold. So you could play it the first way of speculating that new buyers or new demand is forming, get in when we start to see aggressive prints come in, or you could just wait for a retest and wait for demand to form and play a retest speculating that this buyer is going to defend his position. And later in the day, not only did we bounce out of that area, but look what happens. The market pulls back, and where this strange algorithmic large buyer, large seller action was, we pull back into it, bounce out of it perfectly, and rally about, 40, 50 points from that area. So you could play it long, speculating that it's going to form right here, or just wait for a retest. Retests are obviously better. They provide higher quality setups. And I haven't done enough testing yet, but that type of action may formulate stronger demand zones because later in the day, we pulled back into that area. This is what it looks like on a candlestick chart, and rallied from that. So that was just a large bracket buyer / algo, however you want to view it. And that's just how I view the market. So that's pretty much all I got on my end. It's just combining supply and demand. You could use any order flow tool. You could use Bookmap, but volume is very important and market context is very important. Bookmap just kind of adds the cherry to the top of the cake. Time and sales, level 2, it doesn't matter what you use. The premise is supply and demand is very powerful when you combine multiple tools and when you focus on organic price action while maintaining your emotions, coming up with a plan, and trading your edge or your strategy. Every setup that I take and I lose on, 90% of them, 80% of them, basically are trades that I did not trade my setups or what worked for me the best. And there's nothing more frustrating than taking a setup because I expect something to happen in the market, up or down. I think it's going to go up. I think it's going to go down. And we enter a trade based off of that thesis. There's nothing more frustrating than a loss that way. But if you focus on your setups, you trade your edge, and you're very patient for your setups to trigger, then you'll have a lot of success in the market. But you also must master your emotions, maintain them, and focus on psychology. So I'm going to leave you all off on that note. I hope this helped. Definitely check out the links in the description below. Follow me on Instagram. I'm open to any questions there. And check out also the link to the course in the description below. And if you're interested in Bookmap, they hooked me up with a discount code for you guys. Let me know if you have any questions in the comments. And DM me on Instagram if you do so. So I'm going to hand it back over to Bruce. I'm not sure how this ends, but go ahead, Bruce.